Hi, I'm Kylie Mattu, and welcome to Wealthy Millionaire. Today we're going to take a look at calculating your income with the best salary calculator. But first, a disclaimer. I'm not an accountant or a lawyer. These videos are for educational purposes only. And always be sure to consult with a professional before making any financial decisions. When you start a new job, your salary may seem quite simple. You're usually told either the pay you'll receive on an hourly basis or the amount of your annual salary. But when you want to know how much you make on a weekly, monthly, and annual basis, things become a little bit more complicated. All of this information is incredibly important to both saving and making sure that you're sticking to a budget that's appropriate for your salary. Fortunately, by understanding some simple terms and using a salary calculator, calculating your salary is made much easier. We're going to take a look at a salary calculator to figure out what the right budget for you is. First, we're going to take a look at your gross income. If you're bringing home a standard paycheck from your place of employment, as opposed to being an independent contractor, an important term you need to know is gross income. It sounds complex, but the concept is a very simple one. Your gross income is the amount of money that you earn at your job, whether that's through a salary, hourly wage, or some other means. It's the money before your deductions are made. Let's take a look at salaried employees. If you're an employee on a salary, your gross income is your salary divided by 12. This calculation will tell you how much of that salary you earn each month. However, be aware that a salaried employee's first paycheck may be prorated, a partial amount based on when the contract began during the month. Make sure to account for this, as it's probably not a full month's wage. For example, your first $50,000 salary paycheck may only be $2,000 if you didn't start on the first of the month. However, your standard monthly gross income is $4,166 for your salary. Now let's take a look at hourly employees. For hourly wages, simply multiply the wage you earn by how many hours you work during a given time frame. Your calculation will depend on whether you're computing daily, weekly, or even a yearly income. By calculating your earnings, you can verify your paychecks and confirm that you're actually receiving the amount that you have been promised. Just be aware that any pay changes or special circumstances need to be taken into account when calculating. Then there's independent contractors. You're considered an independent contractor when the IRS considers you as not defined as an employee. As an independent contractor, you won't fill out a W-4 form. When you start out at a new job, you'll receive a 1099 form come tax season. You're considered to be self-employed and are responsible for doing your own taxes and deductions. That means no taxes will be held for you throughout the year and a higher Social Security tax. Since no tax is withheld, you'll have to pay an estimated tax quarterly to the IRS in addition to filling out your annual tax return. The checks you receive for work are your gross income. It's up to you to calculate your take-home pay, and you want to make sure that you're always paying your taxes before spending any money. It could be a huge mistake. So now let's take a look at our salary paycheck calculator. Our current pay is $40,000. We're going to put this one for annually. And weekly hours, we work 40 hours a week. So here you can see that our weekly pay is $769.23. Our bi-weekly pay is $1,538.46. Our semi-monthly pay is $1,666.67. And our monthly pay is $3,333.33. And that's with our annual pay at $40,000. Now let's try another scenario. Let's put our current pay at $25 hourly. Same amount of hours per week. So here you can see our weekly pay is $1,000. Our bi-weekly pay is $2,000. Our semi-monthly pay is $2,166.67. Our monthly pay is $4,333.33. And our annual pay is $52,000 a year. So how do you understand your results? The results of the salary calculator are broken down into several categories. Each one corresponds to a different time period. Weekly pay is how much you make each week according to your salary, while bi-weekly pay is how much you make during 2 work weeks, and semi-monthly pay is how much you make in half a month. The 2 longest time periods the calculator provides are your monthly salary and your annual salary. Your annual salary is what you make each year and is very important to understand. What the calculator does not take into account is things like overtime pay, bonuses, and your net income. These are important things to take into consideration when calculating your budget. Now let's take a look at gross income and net income. Knowing the difference between the gross and net income is one of the first steps in gaining a deeper understanding of your salary. Your gross income is not the actual amount that you get to take home. The amount is called the net income or take-home pay. Let's say you're getting paid as a regular employee, not as an independent contractor whose income will look a little bit different. Gross income is pretty easy to figure out if you're an hourly wage earner. Your weekly gross income is the number of hours you worked in a week multiplied by your hourly rate. If you're working at a minimum wage of, say, $10 and you work 40 hours in a week, your weekly gross income is $400. Your monthly gross income would be roughly $1,600. If you're a salaried employee, your monthly gross income is your yearly salary divided by 12. If your annual salary is $40,000, your monthly gross income would be about $3,333. Depending on how often you're paid and where your payday lands in the month, these numbers might change slightly from paycheck to paycheck. You'll want to make sure that your gross income lines up with the wages or salary that you were promised. All the numbers that I'm showing you should be listed on your pay stub, the receipt that comes with your paycheck. Now, the really important question is, where did all your money go between your gross income and your actual take-home pay? The short answer is taxes, called withholding, and deductions. So what is withholding? A large chunk of that missing money that goes to taxes. This is called withholding because you are setting aside that money for your annual taxes. This ensures that you don't have to face a huge tax bill when the collector comes around. When you file your taxes, the amount of taxes paid from your paychecks is considered against what you owe. You may see withholdings for state taxes as well, depending on the state in which you reside. You either get money back as a refund if you paid more than required, or you get another bill if you were short. An estimate of your taxes was already paid to the government. So when you get a new job, your employer should have you fill out a W-4 form. You'll want to fill out this form accurately so that your tax withholding estimate is as close to your actual tax liability as possible. You'll also have deductions removed from your paycheck for Social Security and Medicare taxes, any employer-sponsored insurance contributions, and any contributions into an employer-sponsored retirement account like a 401k. You might also find information on your pay stub about other types of pay like overtime, holiday, and sick pay. So how do we gross holding taxes? You may find yourself in a situation where you get a special payment, such as relocation expenses. To provide you with the maximum benefit of that amount, an employer can gross up that total, which means they include the amount that the employee is likely to pay in taxes on that gross amount. In short, that means that the employer is offsetting the taxes that you'll have to pay by paying you the tax amount in addition to the original amount. Let's take a look at what that means. First, you can determine the total tax rate taking into account both federal and state taxes. Second, you can subtract the total from 100 to get the actual tax percentage. Third, you can divide the planned payment amount by the percentage to determine what the actual tax will be on that total. And number 4, add that tax on top of the payment. Now let's see how we can calculate a budget. Now that you understand your salary and net income, let's learn how to use them to figure out your budget. The calculator provides a detailed breakdown of how much you earn in a given time period. And once you add to this figure any bonuses or overtime pay you received and subtract taxes and other fees, you can get a sense of your weekly, monthly, and annual budgets. Subtract your monthly living expenses from your monthly pay to understand how much money you have left over each month. This is the money that can go towards investing, savings, projects, or other big purchases. For example, if you want to save up to buy a used car at the end of the year, you need to figure out how much you can put aside each week or month. There are tons of benefits to knowing your weekly, monthly, and annual budget. By using the best salary calculator to figure out how much you earn in any given period, you can take control of your budget and manage your money responsibly. While understanding the breakdown of your salary will not affect how much you are actually making, it can allow you to save money and a budget appropriately. This calculation can help you with setting a weekly grocery limit, figuring out how much your salary is spent on rent, or saving for a down payment on a home. I hope you enjoyed that session. I'm Kylie Matu. Thank you for watching Wealthy Millionaire. And remember, the more you save, the more you earn.